will have Apple as our largest investment, but I don't mind at all, under current conditions, building the cash position. I think I would say with the present fiscal policies, I think that something has to give, and I think that higher taxes are quite likely. And
Warren Buffett has offloaded a staggering $75 billion in stocks in the last quarter. This has raised eyebrows across the financial world. Buffett, known for his strategic foresight, is signaling that he sees something the average investor might not. As Buffett wisely notes, the stock market is designed to transfer money from the active to the patient. His substantial sales hint at a potential recalibration in the market or an anticipated downturn. This move suggests he may foresee changes that could impact stock valuations, making it a critical moment for investors to reassess their strategies. Let's zoom in at the last quarter balance sheet of Berkshire Hathaway and have a look at their stock and bond holdings coming into the quarter. As on the 31st of March 2024, Berkshire had $153.4 billion sitting in short-term U.S. government bonds and had a stock portfolio worth $335.8 billion. Just looking at those two lines, Buffett was in 31% government bonds and 69% stocks. But now look at Berkshire's posted results just 3 months later. As of 30th of June 2024, Berkshire held a whopping $234.6 billion more than 3 months prior. Where did this money come from? If you analyze, it came almost entirely from their investments in stocks. On June the 30th, Berkshire had reduced their stock holdings from $335.8 billion to $284.5 billion just in 1 quarter. Maintaining a cash-rich portfolio is a hallmark of Buffett's strategy, particularly in volatile times. He emphasizes, we want to be ready to take advantage of attractive investment opportunities. By holding substantial cash reserves, Buffett ensures that Berkshire Hathaway is well-positioned to seize undervalued assets or weather financial storms. This approach provides flexibility and security, allowing him to respond effectively to market shifts or capitalize on lucrative investments when conditions are favorable. Buffett's playbook isn't new. Back in 2001, before he was famous, he did something similar. He sold off a large chunk of his stocks and held on to a lot of cash.
Well, there are times when we're awash in cash, and there have been plenty of times when we didn't have enough cash. Charlie and I remember in the late 60s, when bank credit was very difficult, we were looking for money over in the Middle East. Do you remember that, Charlie?
Yes, I do.
Yeah, and
they wanted us to repay it in dinars.
Yeah, and the guy that wanted us to repay him in dinars or dinars or whatever the hell they call them, was also the guy that determined the value of those things. So we were not terribly excited about him on payday and having him decide the exchange rate on that date. But we obviously are looking every day for ways to deploy cash, and we would never have cash around just to have cash. I mean, we would never think that we should have a cash position of X percent. And frankly, I think these asset allocation things that tacticians in Wall Street put out, about 60% stocks and 30%, we think that's total nonsense. So we want to have all our money working in decent businesses, but sometimes we can't find them, or sometimes cash comes in unexpectedly, or sometimes we sell something and we have more cash around than we would like.
One notable move was Buffett's reduction in his stake in Apple Inc. At the end of March, just 3 months ago, Berkshire had $174 billion investments in Apple. Now fast forward to June 30th, Buffett has reduced Apple holdings to $84.2 billion. He remarked, "It's not about any fundamental flaw in Apple, it's just about portfolio balance." The decision to sell a portion of Apple, despite its strong performance, reflects a strategic rebalancing of Berkshire Hathaway's investments. This move allows Buffett to diversify his holdings and manage risk more effectively, rather than indicating any dissatisfaction with Apple's long-term prospects. With the Federal Reserve's interest rate currently at 5.25%, the impact on stock valuations is significant. Higher interest rates generally lead to higher borrowing costs and can dampen economic growth. Buffett's sales are in line with the current fiscal condition of these elevated tax rates, which can lead to reduced investment and lower stock prices. As Buffett has observed, you don't need to be a rocket scientist to figure out that the economy has some very big problems, highlighting the broader implications of these economic conditions. Buffett's perspective on the economy is notably cautious. He has pointed out, the economy is on a very precarious footing, reflecting his concerns about potential instability. His actions, including the large-scale stock sales, are indicative of his cautious stance towards the current economic environment. Buffett's insights suggest that he anticipates significant challenges ahead, influencing his strategic decisions and portfolio adjustments. The next Federal Reserve meeting is scheduled for September 2024. Analysts are closely watching this meeting for potential decisions on interest rates. The Fed may choose to maintain the current rate or make minor adjustments based on ongoing economic conditions. The outcome of this meeting will play a crucial role in shaping market expectations and could influence further investment decisions by major players like Buffett. Buffett's recent actions and statements suggest a potential risk of a major economic downturn. He has cautioned, the stock market is designed to transfer money from the active to the patient, and his strategic moves reflect concerns about the stability of the current economic system. If the U.S. fails to manage its debt effectively, it could precipitate a financial crisis akin to the 2008 recession. Such a scenario could lead to severe repercussions for both domestic and global markets. If the U.S. is unable to manage or repay its debt, the consequences could be dire. Buffett has highlighted the risks, stating, "The government's role is to make sure the economy doesn't fall off the cliff." A failure to handle debt effectively could result in a loss of investor confidence, increased borrowing costs, and potentially severe economic disruptions. Such a scenario would have far-reaching impacts on global financial stability and economic growth. As we wrap up our analysis of Warren Buffett's recent $75 billion stock sale, it's clear that his strategic moves reflect a deep understanding of current market dynamics and potential future shifts. Buffett's decisions to maintain a cash-rich portfolio and rebalance investments offer valuable insights into navigating uncertain economic waters. Whether these moves signal an impending downturn or a strategic repositioning for future opportunities, they underscore the importance of staying informed and adaptable in today's financial landscape. We hope this video has provided you with a clearer perspective on Buffett's strategy and its broader implications. Don't forget to like, subscribe, and hit the notification bell for more in-depth financial analysis and updates. Thanks for watching, and we'll see you in the next video.